Hello, and thank you for joining today's webinar about the UK property section of your online tax return. Before we start today's webinar, I'll just mention that this webinar is part of a series that will help you with your self-assessment tax return. These are the titles of the other webinars in the series. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. In today's webinar, we'll look at details for UK property, including rent a room relief and joint lettings, property income details, property expenses, the adjustments page, and the profits and losses page. I'll just mention making tax digital, or MTD for income tax. From 6th of April 2026, there's a legal requirement to use MTD for income tax for anyone that had self-employment and or property income above £50,000 in the tax year 2024 to 2025. You should already have signed up for MTD for income tax and be using compatible software to record your income and expenses for the current tax year 2026 to 2027. However, the principles of working out your income and expenses remain the same. If you signed up to use MTD for income tax early and started to use it in 2025 to 2026, you'll send your self-assessment tax return for that year, including any other income sources, using your compatible software. If you're starting to use MTD for income tax from 6th of April 2026, you need to complete your self-assessment tax return for 2025 to 2026 as normal by 31st of January 2027. The £50,000 threshold is being reduced over the next 2 years to £30,000 and then £20,000. You must sign up to MTD for income tax before the start of the tax year in which you're required to start using it. Find out more about MTD for income tax on gov.uk, in our webinars and our videos on YouTube. Let's now look at the details for UK property page. On this page, we ask you to tell us about the UK property income you had in the year. To fill in the details of the UK property section, you'll need records of your business receipts and expenses or profit and loss account. The first question asks if you want to claim rent a room relief. This is a tax-free amount of up to £7,500 per year from letting furnished residential accommodation in your own home. If you share the income with your partner or someone else, it's £3,750 each. If you use rent a room relief, you cannot use any other expenses against this income or create a loss. However, if you have other property income, you can use the expenses you've incurred for that property as a deduction from that income. Let's look at an example. John has a lodger and receives £9,000 in the year. He claims rent a room relief of £7,500. He can't use any other expenses or deductions against this income, so he'll pay tax on £1,500. He also lets a house and his income from that is £12,000 in the year. His allowable expenses from letting the house are £3,000 in the year, which he can use as an expense, so he'll pay tax on £9,000. If John had £8,000 allowable expenses from letting the room, he'd be better using these instead of claiming rent a room relief, as he'd only pay tax on £1,000. Let's go back to filling in the return. If you want to use your income and allowable expenses to work out your profits, select No. Enter your income and expenses as you would with any other UK property income. When you choose Yes to claim the relief, we ask if you received rent of £7,500 or less or £3,750 if let jointly. If you did, select yes. However, don't include this income anywhere else in the UK property section. When your income is below the threshold, no tax is due, so it doesn't need to be included on the return. If you received rent over the threshold, select no. You'll need to include the full amount you received and claim the tax-free amount later in the UK property section. We'll show you how shortly. You can find out more about rent a room relief in Help Sheet HS 223 on gov.uk. Next, tell us how many properties you rent out and if any of the income is from property let jointly. For joint lettings, only show your share of the income and expenses in the tax return. We also ask if all your property income stopped in the 2025 to 2026 tax year and you don't expect to have any in 2026 to 2027. Although this is an optional question, it's important to tell us if it has stopped permanently to keep your records up to date. We'll now move on to UK property income details. Firstly, how you record your income and expenses depends on the accounting method you're using. These are traditional accounting or cash basis. When you use traditional accounting, sometimes known as the accruals basis, record your income when you're due to receive it, whether it's been paid to you or not. Income due to you but not paid will be allowable as a deduction only when you know it won't be paid. Similarly, record your expenses and deductions when you're due to pay them, even if you don't pay them when they're due. Cash basis is a simpler way of working out your profits and losses for property businesses with straightforward tax affairs. Record your income when you receive it and your expenses and deductions when you pay them. You may have heard about changes to the rules for using cash basis. These new rules only apply to sole traders and partnerships and do not apply to cash basis for property income. So, cash basis is the default way of recording property income and expenses for most individual landlords with income of £150,000 or less in 2025 to 2026. Cash basis may not suit all businesses, so you should consider which accounting method suits you and your business. You can find out more about cash basis in the Property Income Manual, PIM 1090 on gov.uk. Let's go back to filling in the tax return. This is the details for UK property income page. The first question is for your total rent and other income from property. If you're using traditional accounting, the amount may include amounts due to you, but not yet paid. If you let more than one property, the income and expenses from all the properties in that property business are used to calculate your overall profit or loss. For example, if you had 3 residential lettings, add together all the income received from each property and enter the total amount. If you're claiming rent a room relief and the rent was more than £7,500 or for joint lettings more than £3,750, include the total amount of that rent here. We'll show you where to claim the tax-free amount later. This page on gov.uk has lots of guidance on working out your rental income. In this next box, you can claim the property income allowance of up to £1,000. If you choose to use the allowance, enter up to £1,000. This can be split across more than one property business, but the total claimed cannot exceed £1,000. For example, if you've used £800 for a commercial property business, the most you can enter here is £200. If you use the allowance, you cannot include any allowable expenses or allowances in any property business. So, if your expenses are more than £1,000, you may be better leaving this box blank. You can find more about the tax-free allowances on property and trading income on gov.uk. We then ask if you're using traditional accounting instead of cash basis to work out your income and expenses. As we've said, cash basis is the default method, so it's important to answer yes if you've used traditional accounting, as it affects claims to some expenses and capital allowances. This next box for UK tax taken off rent is only filled in by non-resident landlords. If you are, show the amount of tax taken off your total rent and other property income. These last two questions ask about premiums for the grant of a lease and reverse premiums and inducements. This can be a complex area. There's guidance in the Help About links and a chargeable premiums worksheet. However, if you're unsure, you may need to contact HMRC or your tax advisor. Your total UK property income is calculated for you at the bottom of the page. If you've entered an amount for the property income allowance, this will not be taken off your income at this point. It will show in your profit figure later in your tax return. Let's move on to property expenses. This page is for any allowable expenses for your property business. If you've used the property income allowance for this or any other property business, you can't enter any expenses on this page. Also, don't include any expenses from letting a room in your own home if you are claiming rent-a-room relief. There are boxes for you to show the different types of allowable expenses. The Help About links tell you what to include in each box. There's also links to HMRC YouTube videos. It's clear what needs to be shown in many boxes, but I'll just mention some of the boxes on this page. Include here any costs you've had for repairs or maintenance to the property. Do not include any improvement costs. A repair is where you restore something to perform its original function properly. This may be by replacing parts of it. Repairs are a revenue expense, so you can include them as an expense when working out your profit or loss. Improvement costs are a capital expense. You cannot include them as an expense when working out your profit or loss. You may be able to claim capital allowances in some cases. If not, you may be able to use the cost of improvement when you work out any future capital gains tax, if they're still in place at the time. Here's an example. A landlord has an ordinary tap which is dripping. He replaces the faulty tap with a similar kind of tap. This is an allowable expense as a repair. If the landlord replaces the ordinary tap with one that has a pull-out spray head, then this is an improvement because the new tap can perform more functions than the old one. This is a capital expense and can't be included as an expense when working out your profit or loss. What happens if a repair does not have a like-for-like replacement? If you use new or improved materials, this is still classed as a repair or maintenance where the function of the asset remains the same after the work. A good example is where you replace single glazing with double or triple glazing. Other examples of repairs that may be allowable expenditure include stone cleaning, painting and decorating, mending or replacing broken windows and doors, repointing and replacing roof tiles, flashing and guttering. Only show non-residential property finance costs in this box. Don't show any residential property finance costs on this page. For example, mortgage interest or loan interest costs for a residential letting. All residential property finance costs are now used to work out a basic rate tax reduction from your overall tax bill and are shown separately later in your return. You can include the costs of any service you provide to a tenant here. This could be gardening, cleaning, or communal hot water. You can't claim any expenses for the time you spend on your property business, but if you take on a paid employee to help run your business, you can include the cost of their employment here. Please make sure you operate PAYE correctly, even if they're a family member. In the Other Allowable Property Expenses box, include any other expenses you've not already told us about. For example, stationery, business travel and phone costs, but only the business part of these. We're often asked where to enter the cost of electric and gas safety certificates. They should also be shown in the Other Allowable Property Expenses box. If your total property income is below £90,000, including FHLs, you can enter the total of all your allowable expenses in this box, except residential finance costs. Please remember that not all expenses are allowable for income tax purposes. They must be solely for the property business to be allowable. This is known as the wholly and exclusively rule. Where they aren't, the expense is not allowable. However, where you can show a separate amount or part of the expense is solely for the property business, that amount or part is allowable. You can find out more about expenses in our webinar, Residential Property Income for Individuals, Expenses and Deductions. The system will work out the total of all your expenses. Next, we'll look at the Adjustments for UK Property Income page. On this page, in the Private Use Adjustments box, enter any amount of non-business costs that you included in your expenses. For example, if you let a property for 8 months and live in it yourself for the other 4 months, show the 4 months non-business costs. We then ask you about balancing charges. A balancing charge may arise where you sell or dispose of an item that you have claimed a capital allowance for. Helpsheet HS252 on gov.uk has more information about balancing charges. You'll also find this useful for the next few questions, which are about capital allowances. Capital expenses aren't generally allowable. However, capital allowances are special tax allowances you may be able to claim for some capital expenses. They don't include the land or buildings. Remember, you can't claim capital allowances if you've used the property income allowance. Capital expenses you may be able to claim capital allowances for include a vehicle you use in the property rental business, equipment like tools and ladders used to maintain the property, and computers and other office equipment used for the rental business. If you're using cash basis, capital allowances are only available for the purchase of a car. You cannot claim capital allowances for furniture and items you supply for tenants to use in a residential property. Capital allowances allow you to deduct a percentage of the capital expense from your property income to work out your profit or loss. This may be what we call an annual investment allowance, sometimes known as an AIA, or a writing down allowance. You'll also see there are other allowances available, such as the Structures and Buildings allowance and Zero Emissions Car allowance. As well as Helpsheet HS252 we saw earlier, there's lots of guidance in the Property Income Manual, PIM 3010 on gov.uk. On the tax return, these boxes are about allowable capital allowances. They are annual investment allowance, the Structures and Buildings allowance, electric charge point allowance, and freeport and investment zones structures and buildings allowance. Further down the page, there are zero emissions car allowance and all other capital allowances. Please use the Help About links to make sure you're entering the correct amount in the correct box. The next question asks about the costs of replacing domestic items. This is another special tax allowance for capital expenses. It's for residential lettings only, so it doesn't apply to commercial properties where capital allowances are available. You can show the actual cost of replacing domestic items, but not the cost of the initial purchase. The old item must no longer be available for use by the tenant. Domestic items include movable furniture, furnishings, household appliances, and kitchenware. Domestic items don't include fixed items such as baths, sinks, boilers, and fitted furniture. If the new item is an improvement, you can only claim the cost of buying an item which is the same as the original. For example, if you replace a chair with a sofa, this is an improvement and only the cost of a new chair is allowed. Where the replacement is a reasonable modern equivalent, this doesn't count as an improvement. The full cost of the replacement item is allowable. An example would be a replacement fridge with an improved energy efficiency rating compared to the old fridge. So, the amount you can claim as relief is the allowable cost of the new replacement item. Where there's an improvement, limit the relief to the cost of replacing the original item. Add on related costs for disposing of the old item or buying the replacement. Then take off any amount you receive when you dispose of the old item. The Help About link and this page in the Property Income Manual, PIM 3210, gives the information you need to work out the amount you can claim. If you're claiming rent a room relief and your income was above the threshold, this is where you enter the exempt amount. Enter £7,500 or £3,750 for jointly let income. We'll move on to the Profit and Losses page of the UK property section of your tax return. On this page, if you have an adjusted profit for the year, you must enter any loss from this property business that you've brought forward from earlier years in the Loss Brought Forward box. The amount to enter cannot be more than the adjusted profit for the year. Any remaining loss can be carried forward to a later year, and we'll show you where to include this shortly. It will be unusual for an entry to be made in this box. There are very few occasions where a loss can be set off against your total income. Use the Help About link for more information. The figure to show in the Loss to Carry Forward box will be your loss for the current year, if you have one, less any loss you have set off against your total income for 2025 to 2026. Also include any unused losses for this property business that you've brought forward from an earlier year. You can find out more about property income losses in the Property Income Manual, PIM 4200 on gov.uk. This is where you show all your allowable residential property finance costs for the year. This amount will be used to work out a basic rate tax reduction which will reduce your overall tax bill. The tax reduction cannot create a refund of income tax. For this reason, the system will work out the maximum amount of allowable finance costs that can be used, and you'll see this in your tax calculation. Any unused amount can be carried forward to a later tax year. You can find out how the tax reduction is worked out on gov.uk. This box is for you to enter any unused residential finance cost you've brought forward from earlier years. If they can be used this year without creating a tax refund, They'll reduce your tax bill at the basic rate of tax. Any unused amount can be carried forward to a later tax year. Use this space to give any information you feel is needed to support your entries for UK property income. Using the enter or return key will cause an error when you save and continue. Finally, we give you a summary of your entries in the UK property section. Check the figures are correct and go back and amend anything that's incorrect. You can print this page for your records. I'll just remind you that these are the titles of our other webinars in this series to help you fill in your online tax return. You can find out when these webinars are running and about other products to help you with your tax return on our HMRC email update, videos and webinars for self-assessment page on gov.uk. We're nearly at the end of the webinar now. Here's a summary of what we've covered today. In today's webinar, we've looked at details for UK property, including rent a room relief and joint lettings, property income details, property expenses, the adjustments page, and the profit and losses page. If you need more help, our full range of help and guidance can be viewed at any time. Thank you for listening, and goodbye.